The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Let's get, though, first to the stock of the day, which is the ASX Limited. ASIC will impose a $150 million capital charge on the stock market operator. That's in response to an interim report from ASIC, which identified serious shortcomings at the market regulator. Now, the report found that the ASX's focus on short-term financial performance had compromised its role as a critical national market infrastructure. The ASX has agreed to take actions, including reconstituting its clearing and settlement boards, introducing stronger service level standards, and resetting its stalled technology transformation. The ASX says that it will lower its dividend payouts to support the ASIC reforms. Shares are down a pretty punchy 6% just past noon here in Sydney. So let's look at the ASX from a fundamental, but also a technical perspective. You can choose your own adventure, David, because I know you know both, but what do you think of the ASX?
Well, I haven't been a big fan, especially on the chart. If you look at the trend, it's had a major sell-off since July this year. I mean, it's went from $72 down to, it's at a key support level. There it is there. It's at $54 where it is today. So this is where it needs to hold this level, but you can see the sharp sell-off there. So that's back to that previous low that it's hitting right now. That was back in October 23. So, the trend is not your friend here. And the earnings have been pretty, ordinary, to tell you the truth. There's certainly hasn't been high growth. There's been some stuff ups in terms of their, doing things in terms of AI and their technology advancement. So, I would avoid this stock myself. I would not be trying to catch a falling knife here, especially if it breaks that particular support level. And just fundamentally, want to see what happens next year with these this reset that they're talking about and extra capital management. But I'm not. I can't say that I'm overly enthusiastic about it or have a lot of confidence in management.
Yeah, I mean, it has been sort of a litany of disappointments coming from the ASX, really, in their role as market regulator. But some have also, pointed to, the fact that it is critical infrastructure. It is pretty much a monopoly, if we're honest with ourselves. And it was at least paying pretty good dividends.
I think the ASX position has all of the things that you'd really want in a wonderful company, in the sense of that they've got effectively a market controlled position. They self-regulate. I am someone who they regulate, so I'm very aware of the powers that they have afforded themselves and use quite liberally. And as a result, they can generate quite good return on equity and a very high stability of earnings. The challenge has been, and we're all talking about it today, no matter how good your moats are, they are only so good as how well management will execute on them and how much management and board are focused around maintaining them. And the ASX has really demonstrated over the last decade a complete fundamental lack of understanding of its position in the Australian landscape, whether that's regulatory or as a company on the ASX, and yet has been within that glass house very prepared to throw stones. So I wouldn't be surprised that we find more cracks in this glass house, and I'd stay away.
So that's a firm avoid from both of my guests for our stock of the day, being the ASX.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.